All right, guys, what's up? Alec with another stock market investing video. Today it's going to be all about DraftKings. I know some of you really like this stock, so let's go over it. We're going to be going over some exciting things like why it's down. If you look at like the weekly, it's down 13% in the week, and it was even up almost 30% to $63 at one point. We're going to be going over some partnerships that they're talking about, which can be a bullish thing. We're going to be talking about some competition that DraftKings have, so stay tuned for that. And then we're going to also talk about like being a leader in the space and what that means for a company and how important that is when looking for a growth stock. And then we're going to even pull up like their balance sheet and their income statement, which is very important as well. Kind of break it down and see what we have going on. And then we're going to rate this stock as an overall buy, sell, hold on a buy, sell, or hold rating. And we're going to even put a price target on where we want to get in at this stock at too. So make sure you watch the whole thing because we're going to be going over everything on this stock, a full analysis. So get ready. Also, this is what I do for all my one-on-one clients whenever they're interested in a stock or thinking about one. We kind of break it down just like this. All right, so you'll see what happened. Shares of online daily fantasy sports and sports betting company DraftKings down 5%. The company announced a new agreement with Turner Sports today, which is a partnership, but there's other news that has investors spooked. So what? The multi-year agreement with Turner gives DraftKings exclusivity as their sports book and daily fantasy sports provider for all Turner Sports and Bleacher Report properties, other than NBA programming. So that's really good news with the partnership there. But then if you look right here, it says, but it's COVID-19 news out of NCAA college football that is most likely moving the share price today. So you'll see was impacted today when COVID-19 breakout of University of Florida football team forced its high-profile game against LSU to be called off this weekend. That postponement, along with the Cincinnati University, makes 30 games that have had to reschedule this fall, just 7 weeks into the season. In addition to that, the college game postponement, Alabama coach Nick Saban also said he tested positive for COVID-19 yesterday and won't be on the sidelines for this weekend games. It was also announced today that NFL Atlanta Falcons facility has been shut down, at least one positive result on that team. So there's a lot of COVID stuff going on with sports right now. DraftKings is a growth stock that investors have value based on its potential rather than its current fundamentals. With this year's prospect of some sports leagues in question, it's not surprising that some investors are looking to sell first and see how things progress. Then it goes on to say massive decline in sports viewership during pandemic is worrisome too. Younger people are starting to get into more esports and video games, TikTok, social media, and that can have an impact on sports betting as well. What's more, sports fans don't actually like the games in the big stadiums without fans. It's just weird looking, he said. Part of it is the production value, and it's just different. And then it also goes on to say how many people can afford to lose $50 a month during this time, he said. So that's another headwind. And then you'll go on to see DraftKings gambling and entertainment rivals who combined online and brick and mortar operations include PENN National Gaming and Cesar Entertainment, which we'll get into a little bit more a little later on in the video. But then you'll actually see DraftKings has upped its marketing to reach the people at home. And then it goes on to say that DraftKings was hit with a numbing when 45%, the shares crashed 45%. And if you go down a little bit more in the paragraph, and to be fair, even the market's largest stocks and COVID-19 winners such as Apple, Amazon were brought down to their knees. So here's an important thing to notice too. Industry analysts say that online gambling markets will reach between $42 billion and $58 billion as more states consider legalizing online gambling. Because right now, not all 50 states are actually clear for online gambling. So once the market actually opens up and it starts getting legalized, we're really on the forefront of this whole online gambling thing. I think it just became legal like this year. So we're still really early is a good thing about DraftKings. And anytime you're looking at a growth stock in particular, any growth stock, there's a lot of risk that's involved. Now, obviously, there is some risk involved, but with growth stocks, you can see a huge upside is why we are so attracted to them. So it goes on to say currently 18 states allow online wagering, which is a lot less than half. 25 would be half. So we're about 30% right now. So there's still a huge market that's untouched. And if you're on the early stage of this, it can be very big for growth. And then it goes on to say Wall Street expects New York to be among the first of the 4 big states, which also includes California, Florida, Texas, to make online sports betting legal, perhaps early as next year. Regulated betting is quickly becoming a fixture of modern sports entertainment, and collaboration with Turner Sports, AT&T, furthers the scale of the reach and the production of the content to engage its fans. Which I think that if we look a few years, even 2 years from now, 5 years from now, it's going to be totally normalized to online sports gamble. Right now, it's illegal in about 30 states. Yeah, it's illegal in about 30 states. However, recent setbacks in the NFL have shown that it won't be easy sailing for sports betting companies, representing a precedent headwind for DraftKings stock since the shortened season began on September 10th. Several NFL players tested positive, even as they played in the bubble, like we said in the beginning of this video too. All right, so let's get into the competition with PENN National Gaming, which is a stock is a better buy. And this was a pretty good article, so I'll break it down for you guys. And a good point, too, is this. Sports have made a huge comeback after months-long hiatus. So don't forget that we didn't even have sports for a good portion of 2020. There was a few months that there was no sports at all. So you'll see here, DraftKings gained 23% in the past months, outperforming PENN's 14% returns in this period. However, in terms of 3 months performance, PENN is the clear winner with 137% returns in 3 months, ladies and gentlemen, versus DraftKings' 73% gain. And then don't forget that DraftKings recently announced a public offering of 32 million stocks through a syndicated deal to raise approximately $1.6 billion. And then DraftKings has entered the exclusive multi-year deals with the Philadelphia Eagles, New York Giants, and ESPN. So those are all huge partnerships. DraftKings also opened DraftKings Sportsbook and Mardi Gras casinos in Colorado. So if we flip over to PENN, you'll see I recently launched the Barstool Sportsbook app for online sports betting and multiple games, which quickly gained popularity among the masses and rose to #1 app in the App Store. Currently only functioning in Pennsylvania, though, is the big downside. But as to investors like us, that can be a good thing because if you read a little bit more, is planning to expand the reach across the whole country. So they're doing this good. They shot up 137% and they're only functioning in one state, Pennsylvania, right? So keep in mind if they're able to actually get access to all 50 states eventually down the road. So that's what the growth companies is all about, is basically you have to look into the future. So right now they're only in one state, but in the future they're going to be in 20 states, they're going to be in 25 states, 30 states. And that's why they're rallying up 137% is because of the value. Now, PENN has also raised almost $1 billion throughout the unwritten public offering of 16 million shares, which was closed on September 25th. So let's get into some of the financials. We'll read some of these financials and then we'll actually dive into the income statement and balance sheet. So DraftKings reports 23% year-over-year increases of revenues from $70 million in the second quarter and ended June 2020. The company ended the quarter with $1.2 billion in cash and holdings and no debt. Guys, for a company to have no debt, that's actually absolutely unreal, because if hard times fall into this company or into the stock, they're going to have $1.2 billion in cash and holdings with no debt to worry about as well. PENN revenue for the second quarter ended in June 2020 was $1.1 billion. So you can actually see that they had a year-over-year decline, which is actually very important to note, because if you look at DraftKings, they had a 23% year-over-year increase of about $70 million in the second quarter. So Penn State, they're bringing in a lot more revenue, almost 10 times the revenue of DraftKings. But the good thing is that DraftKings is increasing year over year. 23% is a huge number to increase by revenues by. And it also says the market's expected DraftKings EPS to rise 32% next year, which is absolutely insane. PENN's EPS is expected to increase at the rate of 42%. Wow, over the next 5 years. And then also next year, they are expected to do about 125% improvement from the year ago negative results, where we said that they actually didn't bring any. Wow, guys, and this is really huge. The market expects PENN revenue to rise by 35% next year to $4.9 billion, which is absolutely huge. Thus, PENN is the advantageous position here. So if the market is accurate, then PENN has a landslide victory here. They're expected to do $4.9 billion in revenue last year. And if you look at DraftKings, they only did about $700 million. So they didn't even do $1 billion in revenue, and PENN's expected to do $4.9 billion. And then it also goes on in the valuation to say that, in the terms of 12-month enterprise value to sales, DraftKings is currently trading at 50 times more than PENN, which currently is 5 times DraftKings, also most expensive in terms of 12 months. Price to sales, they're also trading more. And then DraftKings 8 times more, trailing 12 months price to book ratio is higher than PENN. So value-wise, PENN is actually going to be a better deal than DraftKings as well. Keep in mind, you never want to stick all your money in one company. So maybe put 70% in PENN and 30% in DraftKings, for example. And then it says the winner, though DraftKings has been on every investor's radar since the unorthodox IPO, the share price gains are not completely backed by the strong financials. PENN's revenue and EPS growth potentially are significantly higher than those of DraftKings. Moreover, PENN is also relatively cheaper and a better deal, hence investors looking to benefiting from the comeback of sports season should bet on PENN. So here we have DraftKings income statement, and you'll actually see that they've been growing revenues from almost $200 million to $226 million, all the way to $323 million, which is really good. They have missed on earnings in Q1 by 8 cents. They missed in Q2 by 20 cents. And their expected is actually a lot lower for this August 14th, Q3. It's negative 50 cents. So the expectations are pretty low, so they should be able to beat earnings on August 14th. Now, if you look at PENN National Gaming here, financials on their income statement, you'll actually see that their revenue in 2016 was $3 billion, which is so much more. And then they grew it by a little bit, 3.1, 3.5, and 2019, 5.3 billion. And then you'll actually see Q3, they missed by 5 cents. Q4 2019, they beat by 33 cents. And then Q1, they missed huge by $5, which is really big. And that's because that's when the whole Rona thing was taking place. And then they beat Q2 by 42 cents. And they're expected on October 29th, which is only about 13 days from now. PENN also has about $437 million in total cash and cash equivalents and about $14 billion in total assets. So $14 billion in total assets, and total liabilities, they have about $12 billion, which is a lot. So PENN's financials look good, looks very solid. Their balance sheet needs a little bit of work. They need a little bit less liabilities. So if they can get their total debt down, they would be a lot more attractive. By the way, DraftKings has a market cap of $17 billion. And PENN has a market cap of $10 billion, and it was just at $4 billion about 6 months ago. So PENN has their revenue is about 10 times the amount of DraftKings revenue, and their market cap is less. So overall, I think PENN is going to be a better bet than DraftKings for long-term growth and a nice growth stock. I say overall they are both buys, though. I rate them both buys. I would say that DraftKings is a buy right now for a little bit of money, but if you can kind of see, that looks like they just hit the support. We're at 44, and the previous support was about 48. So we broke that one. So there's a good chance we can rally down to 42, which is another, what is that, about another 4% loss before it gets any better too. So I would start buying now a little bit, but I would put a price alert of about 42, anywhere from 42 to 41 to buy majority of your shares and hold for a long time. As far as PENN, I am starting to like this company a lot. I would actually go ahead and say that they're a buy right now for a little bit, just the same way. But if you can put majority of your shares in at about $55, that's probably when I would be loading up on the stock, anywhere between 55 and 57. Keep in mind, this very fairly can never get that low. So if you even want to be aggressive and put your price alert around 65, I think that's a good option as well, and we can definitely see it going as low as 65 again. Because if you look at this support right here, let's check it out. You'll actually see it's been hitting a few times. So 1, 2, and the resistance is bouncing off this resistance here too. So if it can break $74, I think it's going to be going up a little bit higher too. So overall, I am liking PENN a lot more than DraftKings. If you can get in at 65 or even lower, I would say definitely buy. I'm going to definitely be buying this stock as well. So I hope that kind of simplifies things a little bit more for you. If you were thinking DraftKings, if you didn't know about PENN National Gaming, hopefully it is now on your radar and you dig a little bit more into it. I hope this video kind of laid everything out nice and easy for you, kind of saved you the time of doing all the research on your own and just condensed it in one specific video. So guys, I hope you did like the video. Share it with a friend that always talks about DraftKings as well, and tell them your thoughts on PENN National Gaming. Go ahead and leave a thumbs up on this video if you did enjoy it and you want to see more content like this. Leave a comment below on what stocks you actually want to see next. That's how I got the idea from this video. Somebody actually reached out on the comments and said they wanted a DraftKings video, so I went ahead and made it for you. And if you guys did enjoy the content, remember, subscribe to my YouTube. That's the only place you're actually going to be seeing these full-length, detailed videos like this. And they're totally free, obviously, on YouTube as well. So there's no point, no hurt in subscribing and smashing the like button as well. It only helps me out, put out more of this awesome content. So guys, I hope you did enjoy. Leave a thumbs up. And until next time, remember, don't time the market, buy the market. Peace.